This is Robert Kraft, and I'm coming to you live on SNNLive, and we're here at the 2016 LD Micro Invitational in Bel Air, California. With me right now is Dean Taylor from Diamcor Mining. I got two symbols for you. First one being DMI on the TSX Venture, and then DMIFF on the OTC. Dean, welcome to SNNLive.
Thanks for having me. It's great. Great to be here.
It's great to have you.
No worries.
So, for our audience that may not know the Diamcor story, let's get an overview first, and then we'll go from there.
Our story is really very simple. We're a production-focused diamond mining company. For the last 10 years or so, we've supplied diamonds to the worldwide market. Throughout the world, we have roughly around 200 buyers that'll attend on a regular basis. We started a new project that we acquired from De Beers about 5 years ago. That one has now successfully been built out and completed. It's in the very final stages of commissioning, and essentially what we're looking to do now is advance that through and make an initial production announcement here in the very short term. So we see processing volumes going up, and obviously with doing that, we're selling more and more diamonds, and that's doing positive things for cash flow and earnings, and that's really our key focus. Is rather than high risk exploration, our focus is diamond production, and the idea is really we deal with gem and near gem quality, and it's really to service the needs of our buyers and our main buyer, our strategic alliance partner, which is Tiffany & Company. Tiffany's owns about 7-8% of the company, so that is really our main focus, is to advance these projects to production as near term as possible, and get those diamonds into the chain.
Okay, so Dean, there was a lot there. Let's unwrap that a little bit. So first things first, let's talk about the projects and really understand, what you mean by near-term production.
Well, near-term production for us is essentially any project that is advanced to a stage, typically by a major, that is usually deemed non-core or is a little bit too small for a major operator like a De Beers. It shows potential, but not on the scale they need. So we take that project, advance it through to production, with the idea being that we're never going to produce 9 million carats like Venetia, who we coexist with, but yet maybe there's a target or potential to see maybe 250,000 carats of diamonds come out of that, and a high percentage of gem quality, and that in turn makes it a very, very attractive deal for a smaller company like ours. And it fits a very good niche where there's just not enough diamonds as we go forward, and so that's what we focus on rather than exploration. So
where's the projects currently at? Like I said, they are in near-term production, but what does that mean for you?
Yeah, the main focus for us is our Endora at Venetia project, which is in South Africa. It is located directly adjacent to De Beers' flagship Venetia mine. Now, Venetia is obviously one of the most prolific sources of gem quality in the world, and what De Beers had determined was about 1,000 vertical meters of that pipe was sheared off in a glacial or other type of event. So what we get is this displacement of material, including the main pipe of Venetia, on the surrounding areas, and we simply strip mine off the top of the earth, removing the same diamonds that came from Venetia, and that's what we essentially do. So very, very low cost, lower capex, a lot of different advantages that we have, and then of course coexisting with one of the most prolific mines in the world doesn't hurt either.
Does the project currently have all the infrastructure ready for production right now?
Yes, it's completely built out. All the capex, it's taken about 5 years to get it fully built out. We have a very large facility, everything in place, about a 500 ton an hour plant that like I said, we're in the final stages of ramping that up. The final stage to our permit, we're fully permitted with a 30-year mining right. We waited until just this last quarter now to get the final water use license in place. That was the last element. So now the focus is on really ramping the plant up and testing it at a much higher production level than we've ever, or processing level than we've ever seen before. And then that'll lead to, that data allows us then to announce a formal production decision, and then we'll just keep ramping and building on from there. So
what does this mean for future revenues, future earnings? How does that affect the company?
We're kind of unique in the sense that what we saw was, even in December quarter, which is the third quarter for us, we saw a break-even scenario, or actually a little bit of profitability. We expected to sort of slide back in the January to March, which was our final quarter of the year. Now our fiscal year starts on April 1st moving forward, but we would expect now to see on a go-forward basis where we'd actually show earnings. So it's a little unique in the mining space where we focus on the core elements of the project with lower capex. We're able to build it out and then get the thing up and running, get it into a production scenario as quickly as possible, with the idea being that we really want to target short-term cash flow, earnings, all those types of things. But yet at the same time, we know there's a tremendous amount of additional area that we can expand out to increase the inferred resource and all the other geological work that extends the mine out greatly and increases the shareholder value dramatically. So key focus for us is minimize dilution, by partnering with groups like Tiffany's, get them, in a position where we're in a strategic alliance, not just an offtake agreement. Try and pick projects with high quality diamonds or a large percentage of that. And then by doing all these things, we're able to keep the cap structure intact, and at the same time then get to a position where we actually have earnings and cash flow, no reliance to raise more money, and then expand out from there. So that's really what our focus has been.
So from what you can tell me, you don't have to give me an exact, date, but what's the timetable then for production?
Really near term. Really what we've done is the way projects of size, like when you're talking 2, 3, 4, 500, $1 billion, in capex, you have to go through a process of 43-101s, preliminary economic, feasibilities, all these things, because it's essential to really know a lot about what you're doing, because the capex risk is huge. When you're talking about a project like this, where you might have $30 to $50 million in capex, the risk is much lower, and so what you do is focus on a core area. Once you know everything about that core area, if that core area potentially will support your initial capex, and you've still got growth from there, we go at it a bit different, where the idea is to put everything in place, and then through the data we get and all the information we get, we can then do a type of feasibility, or not even really a feasibility, but the economics of it are already more or less proven. So even if we don't do a pre-feas or a feasibility or these types of things on it, we have enough data there, and a serious investor will look at it and say, look, it's an inferred resource, but it's a non-uniform deposit. It's located next to, we know the source, we know all the different things. So the risk reward when you're talking about lower capex projects like this is there, and so the development of it is different. So where you'd normally see a large project go through all these different phases, ours is a little different, and so the data that we get from actually running the plant at the higher levels is really what we need to sit as a board and management team and say, okay, we're going to make an initial production decision. It's not going to be done with a feasibility or a PEA. It is what it is, but there it is. And the economics support it, and that gives people a certain amount of understanding on what's going on. So it's a little different.
I was going to say, what are then the challenges potentially to using that? I'm just curious.
Well, the risk reward that you look at in this type of a project would be, can you keep and manage your operating costs? Our operating costs are we've already been able to demonstrate operating costs at under $5 a ton. So it's very, very low cost, and the revenues obviously are multiples of that. So that's attractive, and that's sort of been demonstrated in past quarters. Can you manage your operating costs? Our operating costs are very low. Price of diamonds, obviously they're off a bit now, but we don't expect that to be for the long term. We think that'll come back. And really the consistency or uniformity of the deposit, when it's a displacement like this, it's going to go up and down. You're going to have areas that are better, you're going to have areas that are worse, but overall when you're dealing with large volume, that should smooth things out a bit. So it really becomes, how far out can you go away from the source before that deposit drops off to a point where it's uneconomic. And in our particular case, the operating cost is so low, and if diamonds continue over the next 10 years to go up, which is the expectation, then we got a long ways to go. And so, really we focus on getting it permitted for the long term, getting the infrastructure in place, and then just basically building it out, and away we go.
I usually ask this for any management team that's running a mining company, because it's very important to me, at least, is what's your background? Have you done something like this before?
Not in mining specifically. I've been involved in a number of different companies, both private and public. My background was largely more or less on the corporate side and acquisitions. And so we identified this about 7 years ago, where we believed and had an inkling that there was going to be a divestiture of some of these non-core projects from the majors, and we felt very strongly that because of the pending shortage we believed would be there for diamond mines, that for very low capex we could get something that could produce a reasonable amount of diamonds and be very profitable and very good for shareholders overall without having to go out and try and find the next diamond mine, which is a very, very difficult business, right? So that's what we focused on specifically, was things that are there, that are well known, that can actually be put into, advance to production as quickly as possible with lower capex, that have great economics. They may not be the biggest, but they certainly will be, have potential to be extremely profitable and good for shareholders.
So where can our audience go and find more information about Diamcor?
Our website is diamcormining.com. They can always do that. My contact information is on there always. If they have any questions, they can certainly, get a hold of me, and I'm happy to always bring people up to speed. So.
Absolutely. Thank you.
No problem.
My name is Robert Kraft, and I'm coming to you live on SNNLive, and we're here at the 2016 LD Micro Invitational in Bel Air, California. With me again has been Dean Taylor from Diamcor Mining. Two symbols, DMI on the TSX Venture and DMI.FF on the OTC. Dean, thank you again.
No problem. Thanks for having me.